Hello. Singapore Investment Week isn't just a week this year. SIAS, the Securities Investors Association of Singapore, has decided to broaden it out to encompass the whole year 2015. And the President and Chief Executive, David Gerald, is here with me again. Thanks again for talking to us, Mr. Gerald. What made you decide to broaden it to be a whole year's worth of campaigns, not just 1 week?
Yes. I think investors or Singapore citizens are still staying away from investing. To begin with, $423 billion lying in the fixed deposits, both individuals and corporates. And it shows that, there is lack of confidence. And you can't build confidence with just 1 week of investment programs. You need to keep going back to them, talking about the need to invest, where to invest, how long to invest, and when to invest, and they seems to be quite settled with the fact that their monies could be lost by investing in this stock market because of some of the scams we've had. So it's not true that all investments are risky. There are investments like what MAS has just come up with, the savings bonds, pretty guaranteed. Guaranteed by the government, 2.5%, you just stay put on your investment, right? So there isn't any other that would give them that sort of a guarantee. Many are not aware, yes, and many are not including that. They need to have a portfolio of investments. They need to appreciate their own risk appetite. They need to know what are the risks involved in investments and then how to manage that risk.
So you've just given 3 points.
Yeah.
Awareness,
yes,
education,
yes,
but also confidence.
Yes.
Which one of these is the biggest challenge?
I think biggest challenge is confidence, because many of them have been educated since 1999. They're still staying away because the basic trust is not there. Basic trust is not there because they do not know how to assess the companies and governance of companies. So trust comes with confidence, and confidence comes with knowledge. So it's all interlinked, but investor education alone is not enough. But I think they need to know who is running the company, how safe it is, and why they should put the money in that company and how long.
So whose responsibility is it to build that trust?
Yeah, I think the responsibility begins with the investor. They need to have their own responsibility, and the responsibility is to learn how to be confident. We will provide the platform, we will provide the programs, but they need to come. We can't get them to just get confidence over just 1 week of programs, so we decided we'll stretch it throughout the year, have it over 3 quarters, and week 1, week 2, week 3 for 2015. See how it goes. It might be 4 weeks, 4 times next year, but they need to keep coming back to check with us how they fared, and we need to talk to them about their confidence level, where they're investing, whether they have invested. Where besides the investment week, we have our regular training programs, investment chapters. We will have the usual seminars, corporate profile seminars, exposing company officials to them face to face, meeting them and learning about companies, how to invest, and this will continue throughout the year.
When we look at the global picture,
yes,
we're still getting a lot of negative press,
yes,
newspaper headlines saying, talking about Greece exiting from the Eurozone. Yes. We're still hearing about China's growth slowing as they restructure the economy.
Sure.
The US seems to be doing okay, but interest rates, they're not likely to barrel up in a very, yes, short space of time. In this environment, is now actually a good time to look at investing?
There are plenty of opportunities in every situation. Investing cannot be seasonal. Investing must be according to, first of all, a person's needs, person's appetite, risk appetite, and opportunities are plenty. Now look, there are index ETFs, there are plain vanilla ETFs, there are bonds like the one I mentioned earlier, savings bond, and there are blue chip companies which are doing well. All right, so whilst the world global situation can keep changing and it is volatile, whether it's Europe or America or China, But there are people who are making money. Sometimes they ship their money to commodities, and then they make the money there when it's on the rise, and then take it and they put it on oil, and they learn how to move to stocks, and then they learn how to move to other instruments. We teach them how to do it, and they need to learn. So investing is about learning how to take advantage of the opportunities. All right? Osama bin Laden doesn't happen every day, but the markets move up and down. Volatility is a great thing for traders, but long-term investments like Warren Buffett, value investing is still there. All right, so they need to know how to take advantage of the opportunities.
And you can find out more about the program for Singapore Investment Week, or maybe we should call it Singapore Investment Year, on the website that's on your screen now. Go to it to find out all about the speakers and the agenda, and of course, the dates of when the programs are on.